most traders lose to fake moves. They see supply or demand jump in, then price tears them down, and the real move happens after. Today, I will show you how to spot real supply and demand versus fake inducement. If you trade with this, you stop getting wiped. Simple, watch. Here's the truth. Price is messy. Smart money hides. They create a fake supply under a real supply or fake demand above a real demand. That fake move lures traders in. Retail gets stopped out. Then the real mitigation happens and the smart money clears the opposite side. So you lose, they get liquidity. That's it. Most teachers skip this. They teach zones and hope. We do not hope. We read the inducement pattern and trade after confirmation. 3 things to know. Remember 3 words: build, induce, mitigate. First, build. Price builds supply or demand. That's your point of interest or area of interest market. Second, induce. Price creates a fake opposite move to take stops or trick traders. Example, price breaks down under demand to make you sell, then squeezes up to take sellers stops. That's inducement. For example, this supply is fake. We can label it as fake. Price will eventually take this supply to mitigate above this supply. Something like this. Inducing traders to take this fake supply and liquidate them to mitigate higher supply. After inducement, price comes back to the real zone and then mitigates clear orders. Then the true directional move happens. So the logic is, smart money builds a zone, induces retail into the wrong side, then mitigates that zone to push price the other side. So what I mean is simple. Price mitigates the fake supply, react on it, then breaks it to mitigate the supply above. Now, retail traders or smart money traders would think this is a fresh or new demand. Price induce the sellers, then it is inducing the buyers to take both sides as liquidity. Same things happen here. Mitigates the fake demand, react on it, then breaks it to mitigate demand below, leaving behind a fake supply. Now sellers will be taken out just like this, inducing both sides. Now see this example. What you will do is, step 1, mark the higher time frame zone. This is our demand. You can also see we had inducement here. Price already induced, leaving behind a fake supply. This is our breakout structure. As you can see, there is 2 ways you can enter. Either you can go to lower time frame to look for change of character, or just enter on the rejection like this. Stop loss. If you want to be conservative, you can place it below the demand, or if you want to get higher RR, place it under the rejection, few bips low. Target 1 to 3 or above the fake supply. Yeah. If you want to get higher RR, you can go to 5 minutes or 3 minutes to look for change of character. This is our first breakout structure on lower time frame, and this would be the demand you would enter on lower time frame. We are at 5 minutes. Target, same thing. The fake supply that would be used to induce the sellers. As you can see, you would have gotten higher RR. This works because it uses market mechanics, liquidity, stop hunt, and order flow. You are not guessing, you are waiting for the market to show you the smart money move. Mental rules is patience over impatience. Less trades, better quality. Trade when rules align, not when you feel like it. Keep a journal, record the higher time frame zone, the inducement week, the break of structure time, the entry candle. That's how you improve. If you want daily markups where I show point of interest and call inducements live, DM me induce on Telegram. Link in the description below.